Now, before we begin, I'll start by introducing myself. My name's Katherine Blizard. I've been a business advisor for the last 6 years, but I've owned cafes for the last 30 years. You could say hospitality is in my blood. Now, my superpower is actually building local favourites and also building cafes into million-dollar assets. That's what I'm best at. So understanding your numbers. Let's start with some really interesting facts. Did you know, actually, that 75% of the Australian population drink coffee? Of the 75%, 35% actually make their coffee from home. That leaves 40% of the Australian population who drink coffee. That's 7 million kilograms a year of coffee. And of the 40% who do buy their coffee, 23, just over half, are buying takeaway coffee. And they're paying by card. So 65% of people are paying by card. So if you don't have FPOS facilities, you're actually missing out on a lot of money. Another thing that we do is we often sell combos, breakfast combos, and we sell them as a regular coffee with a bacon and egg roll. But in fact, most people prefer strong coffee in the morning. They prefer a strong coffee, and it's a great opportunity to upsell even on that. When they do ask for that combo, oh, would you like a strong coffee with that? That's an extra 50 cents for you. And it all adds up at the end of the year. But interestingly, 95% of all cafes are independently owned. And however, as owners, with best practice in our cafes, we're earning 10% profit from our cafes. 10% profit before tax is what the average cafe owner earns. A lot of cafe owners at the moment, they're paying to go to work. And what does paying to go to work look like? Well, it's when we're propping up cash flow with our personal cash and credit cards. When we're really dreading the wages each week because we don't know what will be left over. When we're struggling with work-life balance, we're working long hours for very little return. We're unable to pay our ATO requirements. We're concerned about competition. We're anxious about inconsistent sales. And the list goes on. And one thing that we all do is that we are totally preoccupied with cutting costs. When we're paying to go to work, what this actually means is that we're in a startup phase. It's a very natural phase for business to feel like this at startup. Some businesses are what we call in a startup phase for just 6 to 12 months. But other businesses stay in this startup phase for years. And it's actually working towards getting out of that startup phase into a phase that's called return on investment. So we need to move out. And hopefully today I can help you with moving out of that startup phase and into the return on investment phase. But there's a silver lining, because when you are struggling like that, when you are paying to go to work, you're running a lean ship. And there's nothing wrong with that. You're cutting a lot of costs. But the biggest problem is that cafe owners feel comfortable in two areas. They really feel comfortable either in the kitchen or at the front of house where they're serving customers. And what often happens is they spend all their time in those areas, failing to take time out to actually work on the business, because to work on the business takes a lot of time. It's not easy, but once it's done, it's only done once, you get into that habit and it's life-changing because it starts to make you money. Now, a successful business, a cafe owner, is focused on the numbers. They know their numbers. But that's a very small portion of cafe owners who know their numbers. A lot of my clients will say to me, Katherine, I'm not good at the numbers. It's not my thing. Well, it was never my thing either. I dropped maths when I was 16 years old. I didn't even do maths when I was in years 11 and 12. Maths was a weakness. I was in a class called Maths in Space. I was a space cadet. I was so weak with numbers, but I made it a thing. I made it part of what I had to do in business. And there are numbers you need to know. You need to know how much do you need to sell so that you cover your costs. You need to know what are the profits in what you're selling. And you need to know what your overheads are and how you're managing those costs, because they can really impact on your bottom line. Now, there are 3 little steps that you can do to understanding your numbers, and they're crucial steps. If you're not good with your numbers, the best investment you will make is finding a bookkeeper, because a bookkeeper will give you the information you need to stay on top of those numbers. The bookkeeper will do a number of things for you. So the bookkeeper will help you understand where you are now. What are your sales now, and what is the shortfall? The bookkeeper will set you up with an annual budget. So the bookkeeper will tell you exactly how much you can spend with your current sales and give you the numbers that you need to achieve so that you are breaking even and covering all your costs. A bookkeeper will also prepare profit and loss reports. One of the biggest mistakes cafe owners make is they rely on the accountant to do the profit and loss reports at the end of the year. That's too late. 12 months of being behind with BAS, PAYG, super. It's too late because you're going to incur such a great debt. You need weekly or fortnightly profit and loss reports because you need to understand your percentages. Now, I'll explain what percentages are in the next slide. You need to be paying your super monthly, and the bookkeeper will help you and register you for monthly PAYG. What this does is alleviates cash flow issues. So you're paying little chunks at a time rather than big chunks every quarter or every year. So it's important to get yourself set up with a bookkeeper and to do this as a matter of urgency if you are propping up your business with your own money, if you are struggling to make ends meet. So let's look at what the percentages look like and what you need to do as a cafe. On the left, we have a profit and loss statement. It's a sample. And on the right is what I talk about when I say percentages. Now, a profit and loss doesn't look this small. In a cafe, we've always got a profit and loss that gives us our sales. It gives us our cost of goods. Our cost of goods is the food, all the ingredients and drinks we buy to produce the items on our menu. Now, on the far right column of the profit and loss statement is percentage of sales. So you can see in this example, in the red circle, the cost of goods here is sitting at 36% of sales. So this person's cost, they're spending 36% of their revenue on food, on ingredients to make their sales. That's a high number. You don't want to be at 36%. And that, once you take the sales, you remove the cost of goods, you get the gross profit. In this example, it's $45,264. Wages here is good, which includes super, sitting at 26% of sales, which is a very good number. And there are other expenses. They've actually split rent with other, but an accountant or bookkeeper today will put the rent into the other expenses, and they're sitting at 18%, 12% for rent, 6% for other expenses. So this person here has 36% of sales they spend on the cost of goods. They spend 26% of that $70,202 in sales on wages and 18% in other costs. Now, if we look at the right-hand box, the blue one, The cost of goods sold, a typical range in a cafe today is between 28 to 36%. Now, the 28% is really more franchises who have that low number because they have a lot of buying power and they do buy their ingredients at a lower price. And 36% is a really high end for a cafe. And that would immediately tell me, if I was looking at their P&Ls, that they're either paying too much for their stock, their pricing is too low, or they're wasting a lot of their stock. There's a lot of wastage because the best practice is 30%. That's where your cost of goods needs to be. Your labor costs, including super, needs to be at 30% of sales. And your other costs, now your other costs are huge, right? I've actually created a little list: rent, insurances, car leases, electricity, gas, telephone, internet, accounting, bank fees, the replacement of crockery and cutlery, equipment maintenance. The list of expenses is huge and it mustn't go beyond 30%. Now, a profit and loss statement, if you get one tomorrow, and look at your percentages, you will immediately see where you're going wrong, especially if you're exceeding those 30% marks, because the higher they are, the less profit you earn. And I hope that makes sense. Now, the problem is in cafes and restaurants is that owners are relying on gut instinct rather than facts. The profit and loss statements give us cold, hard facts. And every week, a profit and loss statement will help you get back on track. In fact, I always had mine in the back of my pocket every week to see where I was at and where I could drop my costs. If I could save 30 minutes a week on labor, well, that's $20 for me, or whatever it was, $15, depended on the number of staff. So there are ways in which you can reduce your costs to maximize your profit. And the bookkeeper is the one who can do this for you regularly, because your accountant is someone that you only need to meet once a year. Now, with understanding your numbers, number one, of course, is get yourself the bookkeeper. Number two, or a great accounting software package if you are really good with the numbers. Step two is to open a separate bank account. I used to call this bank account Not My Money bank account, because in this bank account, every week, every day in fact, I'd arrange a direct debit from my working account into this other account. A direct debit of money that actually wasn't mine. Because BAS, PAYG and super is not our money. It belongs to the government. So why are we spending it? Throw it into that other account and you will probably find that you'll relax and you'll find that you probably can meet your obligations in your business as well. And the reason I did this on a daily basis was because my turnover was different every day. On a Monday, it could be $3,000, but on a Saturday, it could be $10,000. So what I arranged for direct debits was using that historical information through my point of sale and assistance with my bookkeeper to determine how much money I should be arranging for that direct debit each day of the week. And the last thing that you could do is contact your sales reps. This is interesting and this can save you thousands of dollars a year. You'll be surprised how they can work with you when you start talking about setting up a 12-month fixed pricing contract. So fixed pricing is crucial. Think of all the milk, the bread, the dry goods we buy, or the chickens, the meat. So you can arrange with these suppliers by speaking with them and saying, I want a fixed price for 12 months on these ingredients, and I will stay with you and not buy my food elsewhere. Because this will help you know when you do cost your food that you are making the profits that you've planned to make, because you know nothing, all of your ingredients are at that same price. Because the sense that these suppliers add to our stock each week, we don't even notice, but they all add up. And it's very hard to notice when you're busy how much they're increasing different products each week or even each month. Now, once you know your numbers, you know you've got a budget, you know where you're at, you've already got clarity. You already feel comfortable. You may feel uncomfortable because what your accountant or your bookkeeper has told you is that actually your revenue is not meeting costs, so you need to do something about that. But at least you know what that number is, and at least you know how much revenue you need to get to achieve that break-even point, and the revenue you need to get to go beyond that, so you're making profit. The other thing you need to do is you need to set yourself a sales goal. So if you want to build $1 million cafe, your rent needs to be 5% of your revenue. That's the goal. If your rent is $100,000, your revenue target needs to be $2 million per year. That's if you want to build that $1 million cafe. That is great practice, 5% of revenue, the rent to be. Because $2 million is about $40,000 a week. So it's a big revenue target. But if you're happy with a nice wage and it's a job and you want a comfortable lifestyle, then rent at 10% of revenue is best practice. So how far are you from that? Think about your rent today, and it has to be 10% of your revenue. So where are you now, and where do you need to go to? And that may well be your sales goal or target that you aim for. Now, how do we make these sales? You know, a lot of people say to me, Katherine, my revenue is $400,000 a year and I need to get to $1 million a year. That's a long way. It is a long way. Yes, I agree. But at least you've got 400,000. So we're part way there. We're almost halfway there. The sort of things that worked for me is loyalty programs. Not a lot, only one program, but they need a strategy. If you implement a loyalty program, buy 9 copies and get the 10th free, then you remind your customers, hey, have you got your card with you? Or have you tapped into the screen? Remind the customers of the loyalty program so they're using it. And when they do get that free coffee, they actually get very excited. If new customers are coming in, hey, you've been in twice, would you like to have a loyalty card? It will save you money. Who doesn't want that? So it's a very great way to increase sales and I guess to retain customers and add some extras. You need to be doing social media every day. Every day, you need to be top of mind for your customer. When they're thinking of coffee, you want them to think of you. And social media does that. It makes them subconsciously think of you because they see you every day online. Claim your business on Google. Reviews really work. There's a great City of Bride webinar on this. So go to their website and take a look. I used to actually create a monthly newsletter. I'd get an A4 piece of paper, A4, fold it, and I'd print a newsletter. The newsletter would sit by my coffee station. So when people were waiting for coffee, they could read it. And the newsletter was very simple. Didn't have a lot. It would include, I'd have a quote. I'd have a recipe that the chef would put together. We used to have very creative staff. One of them was a movie buff, and he'd write about his favourite movie and, you know, why everybody should watch it. We'd introduce new staff in the newsletter. We'd tell people about staff who were leaving, staff who were going on holidays and where they were going. New things on the menu, specials that were coming up. It was a great way to build familiarity for us. Customers loved to read about staff. So a local favourite is all about familiarity, and a newsletter is free. It takes you 1 hour to put together, and it's something that sits there and is great for your branding and for your community. Other things you could do here is things to consider: online ordering apps, Hey You, for example, and online reservations. Customers like to visit their cafe, or might want to visit your cafe, but want the assurance that they've got a table. So online reservations can be quite good as well for increasing sales. But these activities here, quite frankly, are more branding activities. I do feel that they added some value and they did actually work, but what really worked was upselling. That's what really worked. That's what added thousands of dollars to my revenue each year. The upselling, there are two types. There's upselling where you have to train your staff, and there's upselling where you don't need to train your staff. So let's look at training your staff and what that upselling looks like. Because, you know, McDonald's, when they implemented "Would you like fries with that?" that involved training their staff to say that and when to say that. So what we did, and what I do with my venues, is I organise menu tasting evenings for the staff twice a year. And this gives them the opportunity to taste all the food on our menu. They rate it. We talk about it. We talk about optional sides, because upselling is not just about us making all that money, but it's also about enhancing customer experience. The customer will be really happy if you suggest a side that they may enjoy with that meal. So menu tasting is really important for teams in cafes, because when staff do recommend things to customers, it actually comes from a genuine aspect. It's not fake. It's not something they've been taught to do. They tried the food. They know what it tastes like, and they can make really great suggestions that will work for us as business owners. The other thing, of course, that we train staff is how to sell coffee and drinks. Customers remember the first and last thing you say to them, and they particularly remember the last thing you say to them. So if you have 2 sizes of coffee, would you like a regular or large? But if you have 3 sizes, you would say, would you like a medium, regular, or large? You put the cheapest option in the middle, because it's the one option that they will remember the least. You want them to order the larger of the coffees. The water is the same. Would you like still, tap, or sparkling? The cheapest in the middle, the most expensive being the last, because that's what customers remember. And one of the biggest things you need to train your staff to do is when they're walking around your cafe, especially if you have dine-in service, they ask their customers, would you like another coffee? I have 2 examples. One's a good one and one's a bad one. And let's call these case studies. I was in Broadbeach last week and I walked into a cafe. My daughter and I ordered the cheeseburger combo. The girl at the till asked us if we would like aioli or sauce with our chips. We were excited. Of course, we'd love that. I'll have aioli. My daughter would like tomato sauce. That's an extra $2. So if that venue made $12 in that day from those sources, that's $4,000 extra per year for their revenue, just by asking that simple question on a $2 sale. So imagine what it would be like if your staff were doing this for coffee as well. Would you like an extra coffee? Or giving them suggestions for other options. The bad case study here was one I went to in Cronulla. It was a beautiful cafe, very modern. Me and 3 girlfriends went. We sat down, we ordered food and cocktails. We were there for 90 minutes. In those 90 minutes, they cleared our table. There were that many staff, yet no one approached us to ask us whether we wanted an extra drink, whether we wanted an extra coffee or even dessert. They totally ignored us. I actually had to wave my hand to get their attention so that we can pay the bill. So that's a really bad example on a number of different levels, because what that tells me is that venue is failing to monitor or even implement key performance indicators. The first KPI that they should have implemented is employee revenue. You've got that many employees. It's table service. Are you monitoring how much each of your employees is earning for you? They didn't have that, because if they did, I would definitely have had someone approach me to ask me if I wanted dessert or another drink. The other thing they have failed is they have failed to understand an efficient business. They were very inefficient. When we have tables, we want them to turn regularly. We want people to leave and more people to come. And giving the customers the bill is very important. And communicating with that customer is crucial. This cafe didn't do any of that. So I would guess that they're struggling. Now, there's upselling that you can do that requires, as I said, no staff training. The Baker's Delight method. Add some food samples to the front of your point of sale where they're ordering with some toothpicks. Let them taste some of the goodies that you've baked. Food displays around your point of sale. People love that. It makes them buy, and that's what you want. You want to increase sale. Have you taken advantage of the Dine and Discover New South Wales vouchers? The City of Ryde has 100,000 people who are eligible for these vouchers. 100,000 people in your LGA have $50 worth of Dine and Discover food vouchers. That's $5 million in your LGA. Have you registered as a cafe business? Because you're missing out if you haven't. And how about creating $25 combos and promoting the fact that you are participating in the Dine and Discover New South Wales program? It's a huge opportunity to increase those sales. And of course, finally, clever menu design. Now, clever menu design is crucial to making money. Believe it or not, 80% of cafes do not cost the food that they are selling. They're basing their prices on competition, and that's really dangerous, because if we compete on price, we do die. We need to add value and think about value. That's what the customer wants. They don't actually care about the price. If the service is great, if the food is consistently fresh and delicious, if the venue looks amazing, they will pay. They don't care about the price. So, but venues are not costing the menu. So to make money from your main source, the menu, you need to understand how much every item is costing you to make. So the first step you need to do in this area we're still on upselling, right? But we're talking about what you're going to do before you start upselling this menu is you need to cost every single one of those items on your menu. So you need to understand ingredient-wise how much each of those things cost you in ingredients. Then, and you may not be able to do this alone. You may have to do this with the help of one of your staff because it is a big task. The second thing you need to do is print off a point of sale report that lists every single item on the menu from most popular to least popular. So you need to know that. So now you've got prices, you know how much each of these items are costing you, you know how much you're selling them for, and you know how popular or not popular they are. So what you do then is you create 4 columns. One will be the stars, labelled stars. The second will be plough horses. The third will be puzzles. And the fourth will be dogs. So using the information you have, you will put each item on your menu in the appropriate column because you have just identified the stars. You know the things on your menu that have high profit and are really popular. But you also know the items that are low profit and not popular. So this is a crucial exercise because this is magic for profit and sales in your business. Now, the puzzles are interesting. You've got this menu item. It's got high profit, but no one likes it. So when you do that menu tasting with your staff, and you should do that after you've done this exercise, is you can talk to your staff, raise it in a meeting. Say, hey, this is high profit, but no one buys it. What do you suggest? What can you suggest we do? And you'd be amazed what your staff can actually say to you because they're the ones talking to the customers. And the plough horses, the low profit, that are very popular. We don't want many of those on our menu. They do bring customers in, but we need to think about what can we add to these? What can we suggest to customers that will increase the profit, like a side? What side would work really well with these that we can upsell on to improve the profitability? So once you have this information, again, you're very clear. You know exactly which item on your menu is making you money and which item is not. And of course, at the end of the day, do you want the dogs? Do you want items on your menu that don't make you any money and no one likes? We call this flogging a dead horse. But what it allows you to do is create a menu design that will make people buy more. And what does that look like? Well, when you think about menus, clever menu design, now you know the stars on your menu. You know the ones with a high profit. Do something with them. Put them in a box. Put a little asterisk next to it. You know, how many restaurants do I go to where they have a page on chef's selections? Well, those chef's selections are the high profit margin dishes. In your cafe, think about each of your categories. You might have breakfast, sandwiches, burgers. How many categories do you have? Desserts. So each category, you should identify the stars and highlight them. Now, you can't really highlight too many. In fact, with this sort of exercise, I wouldn't be highlighting more than one. You can add a photo. That's good, but you can't add too many photos. So you can add a photo for every category on your menu, or you can box something that's really high profit and really popular, because that's what you want people to buy, the things with high profit. The other thing you should be doing on your menu is don't have a list of prices in a column on the right-hand side. So that's bad practice. Why? Because the customer looks at that and really makes a decision in this situation, and they can sometimes base it on price. You do not want your customer basing their selection on price. You want them basing their selection on what they like the most. So best practice is where the tick is, put the price at the end of the description and remove the dollar sign, because the dollar sign reminds them of money, and we don't want them to be reminded of money. Now, other little things that you can do, of course, you're going to describe your menu items, but use evocative text. Crispy cucumber, crunchy cucumber, crispy lettuce, juicy tomato. That's evocative description for your menu. McDonald's gets away with it. They can put lettuce, onion, and so forth. They don't need that, because their whole way of selling the menu is through images, and they do that very cleverly. But we as cafe operators don't have the budgets of McDonald's. So we've got to use our own way of describing each thing that will make, or each item, which will make customers want to buy it. And mention brand names. If you're using Lindt chocolate for your hot chocolate, mention that. If you're using Pepsi butter, mention that. Mention brand names. Humanize your menu. Mama Effie's rice pudding. If you've got something that was your childhood favourite cake, Angela's childhood favourite caramel slice. So humanize it as well. Cafes do really well with that. But the yellow section here is really crucial. Remember that the way you list your menu items is really important. When people look at a menu, they often choose the things on the top of the menu, or on top of that category, or right at the bottom of the category. So this is the psychology of how we look at things. And so because you know your high profit items, and if there are those dogs on the menu that you want to keep because a couple of customers really love them, then all your popular items for each category need to go to the top of the category. So for example, burgers, you will have the 2 high profit burgers on the top of the list, and the other high profit burger right at the bottom, the last item of that list. The burger with the least profit will go just above the last item on that category. I hope that makes sense, because the item that people rarely choose is the second one from the bottom of each category. So keep that in mind, because if you want people buying items with the most profit, that's what you need to do with your menu. You want people buying those items. You don't want them buying things with no profit. Of course, the last thing is, how many pages do you have on your menu? A single page has the least sales, because people look at that list. They're either looking at the top, where most cafes list their toast, their scrambled eggs, all their cheap items, and then they're looking at the bottom, which are the drinks and a coffee. So what do cafes sell? Toast, scrambled eggs, and coffee. The best type of menu is a 2-panel menu. A 2-panel menu is, say, an A3 size or A4 size, double-sided, and what that does is people actually look at it and they feel like they're getting a full dining experience. And that's the difference. Because if people feel like they're getting a full dining experience, they're going to order more from your menu. And that's how we increase our sales. Now, the one last thing I will mention about clever menu design is that you shouldn't really exceed 7 items per category. 7 sandwiches, 7 burgers, 7 breakfast items. Already we're at 21 items. Maybe you've got a dessert menu. Maybe you've got shared plates. So already that menu looks pretty heavy. But if you've got pages and pages of menu, you need to really think about that carefully. I went to an Italian restaurant in Parramatta about a year ago, and that's what I was given. I was given a book full of pictures and a whole lot of items. And at the end, I ordered a veal scallopini. Now, that veal scallopini came to me with a side of bok choy. Now, why did it come with a side of bok choy? Because they have that many dishes on that menu that they probably ran out of broccolini and ended up putting a Chinese ingredient or an Asian ingredient into an Italian dish. It didn't work. It actually didn't taste good. So these are the risks you take by having huge menus. You've got more training. You've got to buy more stock. There's more food preparation, and there's a higher risk of inconsistency. By doing the exercise and identifying what people really love, work on that menu mix to determine what you'll actually keep and what you can actually throw out if you've got a menu that's too long. So some interesting information. You've got my number and you've got my email on the screen, so please don't hesitate to contact me.